According to famous The Big Short Michael Burry, through his latest tweet has warned us about inflation again. Time and again Burry has been talking about pandemic-led inflation and had put options on one of the most profitable stock like Apple in these times. According to Burry, inflation has peaked in this cycle, which is also backed by the Fed's data. As per them, the annual inflation rate in the U.S. slowed for a sixth straight month to 6.5% in December of 2022, the lowest since October of 2021, in line with market forecasts. It follows a 7.1% reading in November. Energy cost increased 7.3%, well below 13.1% in November, as gasoline cost dropped 1.5%, following a 10.1% surge in November. Also, fuel oil costs slowed, 41.5% versus 65.7%, while electricity prices rose slightly faster, 14.3% versus 13.7%. A slowdown was also seen in food prices, 10.4% versus 10.6%. On the other hand, the cost of shelter increased faster, 7.5% versus 7.1%. Compared to the previous month, the CPI edged 0.1% lower, the first decline since May of 2020, and beating forecasts of a flat reading. Inflation seems to have peaked at 9.1% in June of 2022. Despite the bigger-than-anticipated slowdown, the annual inflation is set to remain more than 3 times the Fed's 2% target, pointing to broad price increases across the economy. And Burry also stated that U.S. is already on recession by any definition. Technically, recession means a period of temporary economic decline during which trade and industrial activity are reduced, generally identified by a fall in GDP in 2 successive quarters. As seen on this chart, U.S. GDP fell in 2 consecutive quarters, example Q1 and Q2 of 2022, during which U.S. GDP contracted by 1.6% and 0.6% respectively, but the U.S. economy grew an annualized 3.2% in Q3 of 2022, better than 2.9% in the second estimate, and rebounding from 2 straight quarters of contraction. Consumer spending rose more than anticipated, 2.3% versus 1.7% in the second estimate. Also, non-residential investment jumped at a faster 6.2% versus 5.1% in the second estimate, boosted by equipment and intellectual property. On the other hand, residential investment sank more, minus 27.1% versus minus 26.8%, led by new single-family construction. Burry has predicted that Fed will cut rates, but no Federal Reserve officials thought it'd be appropriate to begin cutting rates in 2023, and officials worried easing financial conditions could complicate the central bank's efforts to bring down inflation. According to internal discussions at the Fed's policy meeting 3 weeks ago, a remaining question for investors: at what pace will the Fed raise rates in future policy meetings after slowing down to 50 basis points in December? So, we have to wait and see about this prediction. Burry, also during his last part of his tweet, stated about government stimulus and another spike in inflation. Although the federal payments that started in 2020 have long since run out, some states, which were later to the game, are still in the process of distributing aid. While many programs ended in 2022, a few states still have 2023 payments on their schedule, but according to many sources and legislative process, Congress would have to pass a new law authorizing a 4th stimulus check, and that has not happened. So, we have to see if Fed send another stimulus check to Americans, which is at the moment, but the man, the legend himself, has been right on so many occasions. We will have to wait and see about his prediction. So, overall we can say that Burry is still not fully confident about economy going into 2023 and fears more inflation throughout the year and more government spending and rate cuts.